Hello friends, welcome to Nirmal. I am Piyush Jain, and today we are doing a result review, a conversation with the corporate management where the heritage goes many decades behind, one of the most admired business houses in the country. Let me now welcome the BSL Limited Managing Director, Mr. Nivedan Churiwal. Sir, welcome to the show. So, Bhilwara Group actually is known across the country, and now we're talking about BSL here. From the BSL perspective, and since for our viewers, we are actually I would say, very happy to have you on our show. I would like our viewers to sort of take benefit of knowing more about the company and how the company revenue model is working in, because over the last 7 to 8 quarters, you have really progressed by leaps and bounds. So, from the perspective of business, what's the revenue model of the company? We know that you are into suitings, you're into furnishings with your tie-up with IKEA, and then host a lot of things which you do. Please make us understand how the revenue model works.
So, thank you for this opportunity at the outset. And I think one of the biggest strengths of BSL is that we are an extremely diversified company. I mean, as you yourself mentioned, we have presence in diverse product fields such as suitings, furnishings, and yarn manufacturing. And within these fields also, we have a global presence as well as pan-India presence. So, if I have to conclude the product portfolio, as I mentioned, in suitings, if we have to talk about revenue, it will be about 35% revenue coming from suitings, around 20% each, 20-25% from yarn, and 25% from furnishing, and balance from some of our other businesses. Going forward, this is going to change because, as you know, we have taken a quantum jump in the cotton spinning area, and with this cotton spinning project coming into full flow from April. So this year, we expect our revenues to grow substantially further. We've seen our revenue has been constant around 450-475 crore range for the past 2-3 years. Despite the more or less same revenue, our profitability has increased substantially. But this year onwards, going forward, we see a quantum jump in our top line as well as bottom line.
Right. So let me sort of add some more I would say, information for our viewers. Basically, company got listed in 1976, and since then, actually, company has added so much of capacity, and we'll talk sort of more questions on that. But you're talking about fabrics, worsted yarn, synthetic yarn, vortex yarn, fabric processing, fiber and yarn dyeing, cotton yarn. It's a very diverse sort of product range which the company has, and this is why we are so much of interested in really sort of asking how we should be looking at. From the perspective of raw materials, sir, what sort of raw materials company is dependent? How much you're taking it from India? How much you're dependent on the sort of imports? Is there also a sort of currency dependency? Because as I understand, largely these are commodities and also subjected to price fluctuation.
So raw material, again, it depends on which sector we're talking of. If the suiting business predominantly is synthetic, and the fiber sourcing is all within India. And in fact, for our suiting business, we buy most of our yarn. Some of it is captive, and we buy most of our yarn. And of course, if we go down the chain, it is predominantly dependent on the crude prices. And we know how volatile the crude prices have been because the polyester fiber prices are largely dependent on the crude prices. Furnishing again is a synthetic base, so that is again largely dependent on crude prices. And spinning industry, again, we're making PV yarn, which is again based on the polyester fiber prices fluctuation. When it comes to worsted spinning, our wool tops and all, they're all mostly imported from Australia. And as we have seen in almost all fibers, there's been a lot of fluctuations in the Australian wool prices as well. And now the cotton spinning that we have set up, I think the kind of volatility that we have seen in the cotton industry in the last 12 to 15 months, it's been extremely volatile and extremely unusual. The candy prices went from 40,000 rupees candy to 1,05,000, and now it's hovering around 60,000. So this kind of volatility is not good for anyone, but we're hoping that we soon see stability here when no one can predict. And also the fall in demand from Europe, because ultimately the yarn is converted into fabrics and then made-ups and garments, and then most of it is consumed in the Western markets. So the sharp fall in demand from the Western markets is definitely affecting the cotton industry and the spinning industry as of now. But I'm sure as soon as these demand starts picking up, the prices and the margins will start improving for the spinners.
Right, and taking a look at the fourth quarter numbers here, we actually have seen that revenue basically is largely looking stable, almost same versus the last year. But we have seen improvement in the margins. Perhaps as you're highlighting, the raw material prices actually have slightly cooled off. From a perspective of gross margins versus the last year, it has jumped to 51% versus 48.8%, and net profit margins have improved versus last year. So versus the last quarter, has there been an increase in raw material prices? Because we have seen a mild dip in the EBITDA margin versus last quarter, but they are higher versus last year.
See, quarterly fluctuations can always happen. If we're discussing the annual results, I think it is always good to see the entire 12 months on a year-on-year basis. And if you see the annual picture, our EBITDA increased from 41.4 crores to almost 54 crores. So that's a quantum jump. And I don't see around it is 11.5-12% EBITDA. And we're confident that going forward with even with the enhanced turnover, we should be able to maintain this 12% EBITDA margin, which is the goal that we have set out.
Yes, and while I was going through the numbers, sir, the most interesting part of the story actually, which I was thinking was that you have done a massive sort of capacity increase. Help us understand that, because it appears that perhaps the sort of commissioning and the revenue contribution is going to start very soon over the next June quarter and more in the September quarter. How much sort of revenue sort of progression you are looking at, and what sort of contribution the margins it can bring?
So we were contemplating for quite some time as to which area we should expand in, because we were very clear in our mind that yes, we have to expand and take the company forward. And cotton spinning sort of came up as one of the most obvious answers, because in the last 10-15 years, if you see the maximum growth that we have seen in the textile industry has been in cotton predominantly, and then cotton spinning has been India's growth driver. So we decided to go ahead with this. We've spent about 150 crore rupees in this, where we set up around 29,184 spindles, where we're making pure cotton yarn. In fact, the commercial production just started from 1st April 2023, and we expect a revenue of around 15 to 20 crores additional revenue per month, which would mean about 650 to 700 tons of cotton yarn being produced every month. And depending on the product mix, 15 to 20 crores of revenue. So 200 to 250 crores to 30 crores of additional revenue we are expecting. As far as margins are concerned, as of now, the margins are very low, which is across the board for the entire cotton industry. But cotton, as you will understand, is a commodity. There's a cycle. Just barely 2-3 quarters ago, it was at its peak. The margins were at record highs, at all-time highs, and now it has come down to pretty low levels. But I'm pretty sure, as I mentioned earlier, as soon as the demand starts picking up, gradually there will be a change, and there's a cycle. If you take a 2-3 year horizon, or take a 2-3 year period from any time frame in the cotton industry, there's a peak and there's a low. So it's, in a way, it's good we're at the bottom of this cycle, and from here I think things should improve only. When it will improve, I think I'm not in a position to say that, because time will tell. But yeah, sooner than later it should improve.
Sure. I think for our viewers, if you take a look at the last 5 years trends, gross margins have largely remained stable in the range of 48 to 51%. But over the last 2 years, FY22 and FY23, we have started seeing some more improvement in the gross margins, and FY23 gross margins have been the highest in the last 5 years. Even if you take a look at the EBITDA margins, highest in the last 5 years, largely in the range of 8 to 9%, but now we're talking about 11% EBITDA margins. Sir, just one question. We have seen FY23 as a trend changer for EBITDA margins, despite all the headwinds and all, because if I look at the numbers, you have now creeped into double-digit EBITDA margins. Any sort of major reason for this sort of efficiency?
So, you see, if you go 2-3 years back, our margins were obviously pretty low. So, we started working in all areas, and we made various improvements in all areas, in production, improving the efficiencies, reducing wastage. cost cutting, reducing overheads, reducing staff and workers. So wherever there was the opportunity to trim our flap, we have trimmed it down, improved our efficiency, and focused on improving our marketing. Was ultimately that is what is going to help us improving our sales, improving our margin in each segment, whether it is domestic or export across the board. And it's the combination of all these efforts which has led to the improvement in the margins despite more or less constant top line. And of course, furnishing is an area which continues to drive our profitability, and I'm sure that will continue to do so going forward. So there's no specific particular reason. It's a combination of various factors, and thankfully the hard work has paid, and it's just the beginning. We just started seeing the results. I'm sure as we go forward, we'll see a lot of improvement happening further.
Sure. And from the perspective of new markets, any particular new geographies which you're targeting, or any particular geographies where you already have presence and you are actually trying to sort of make deeper penetration this year?
It all depends on sector to sector. In export suitings, as I mentioned, we already present in around 55-60 countries. We're just trying to consolidate our base, and we're just trying to increase our presence in some more profitable Western markets. In domestic, we have a pan-India presence, but we're trying to increase our reach, increase our rack space across all the retail counters across India. We've seen a good jump in our numbers, in our sales, and number of stores that we have present, increasing our wholesale base across the country. Furnishing, as I said, it's predominantly IKEA, and it's improving. There's a temporary dip because of the slowdown in Europe, and IKEA sales are predominantly Western Europe based, but again it started improving. And the yarn market, cotton, we just started. We expect 60-70% to be export and 30% to be domestic. And export would be to the major consumers of yarn such as Bangladesh, Turkey, Taiwan, Korea, and these places. So it's a very diverse mix, as I said, pan-India and pan-global.
Right, sir. And from the perspective of, I also want to go to the balance sheet also, because we have seen FY23 in particular, due to your very large capacity expansion, we have seen rise in the net debt. What's the average cost of debt, sir, right now you're servicing?
Around 8%, quarter to 8%.
Okay. And as per you, what are the plans for sort of bringing the net debt back to the earlier levels? Because right now, if you look at the net debt to EBITDA, we are almost talking about 5 to 6 times.
Definitely the debt has increased, and if the position where the company was, if we have to take a quantum jump, there would be an increase in the debt equity ratio for once, otherwise we would not ever be able to take this quantum leap. But going forward, we are very confident that we will achieve our targeted profitability numbers, and based on that, all repayments will be on time. And as and when the situation permits, maybe we start looking at prepayments also. I mean, I'm not in a position to comment anything on that. But all our repayments will be in time. Our profitability will increase. So gradually, you will see the debt equity ratio will start normalizing. And once this is done, whenever we go in for the next expansion, this kind of a skew will not be there in the debt equity ratio, which you see as of now.
Okay. And from the perspective of any sort of equity fundraising plans, any equity issuance, any sort of monetization plans?
No, we have no such plans as of now. Going forward in the future, if we do have any plan, we will be happy to share with you. But as of now, we do not have any such plans.
Sure. And coming back, I'm just integrating numbers here. We were somewhere around 450, 500 crores in between that, 470 crores about last year, adding 250 crores. Should we expect 250 crores this year, or is going to progress stepwise?
No, in this financial year, I'm very confident that our final turnover should be somewhere around 750 crores, maybe 5% here and there. So that, as I said, will be a quantum jump. And the goal that we have set out is our present EBITDA was 11.5%. So we're targeting at around 11.5-12% EBITDA on our enhanced top line. And based on that, I'm sure the bottom line would correspondingly increase. That is the goal that we have set out, and I'm very confident that we should be achieving that numbers.
Absolutely. If at 11.5%, 750 crore revenue, we actually are talking about almost 85 crores EBITDA. and that would be actually a good 60% plus jump in the EBITDA, and that's something perhaps should be very exciting for the investors and our viewers also. So that's about the numbers here, sir. And from there, how's the plan looking for the next 4 or 5 years? Where the company is really looking in terms of product profile, in terms of where they want to really expand?
Well, it's a bit early to talk about the next 4 or 5 years because we've just taken a big expansion project which has just been completed. But I could definitely say that this growth journey is going to continue. Once this expansion settles down, then we'll be looking at probably a next phase of expansion, which could be as the next phase of 20,000 cotton spindles, expanding our suiting business. Whatever would be there would be within our existing product portfolio because we already have a very diverse product portfolio, which I mentioned at the outset. As of now, I cannot commit as to what would be the next expansion, but definitely this expansion, this growth path that we have set up on would continue, and you would see good growth, at least 10-15% growth year on year. Once this 750-800 crore range settles down, you would see that we will keep on expanding and growing at a good sustainable pace, both in terms of top line and bottom line.
Right, sir. So, last two questions, I'm clubbing them into one. One basically is with respect to IKEA. What sort of plans are progressing right now? How basically the revenue growth has been in the last year with IKEA? And the second thing, exit. We are already in May, so from the June quarter perspective, half of the quarter has gone. Where are the cotton prices right now, from the perspective of per candy?
So, okay, I'll take your second part first. So, cotton prices are hovering around 60,000, and we really don't know. I mean, I'm not a cotton pundit to predict where it will go from here. So, my guess is as good as yours. We are expecting that the prices should stabilize or marginally increase, but we're certainly expecting the margins to improve from here as we see improvement in demand from the West. And coming back to IKEA, well, as I said, it's one of our most important businesses. We supply exclusive furniture fabrics to IKEA, and we are probably not just one of the few companies from India, South Asia, but there are probably just several companies in the whole world who are supplying these fabrics to IKEA, and we take great pride in that. And if you walk into any of the 450 IKEA stores worldwide, you will see our products. First up is the living room section, and you will see our products. And as we all know, as I mentioned, there's a dip in the Western markets because of which the IKEA business is more or less, I would say, at a stagnant level. But the indications are very good, and they're expecting good rise in numbers, because of which I'm confident that once things start improving in the West, not only our IKEA business, but the cotton business, and overall there'll be very good progress in all our business segments across the board.
Well, sir, with that, I think we come to the conclusion of this conversation. It looks like a very strong year, which is coming up for you. And we wish you all the best. And we really hope to again connect with you post the June quarter results. Perhaps that could be the first of many quarters where your new capacity expansion will start producing. So overall, thanks a lot for coming on our show, sir.
Thank you. It's been a pleasure. Thank you.
And with that, dear viewers, that's a wrap on this show. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.